What's going on, traders? In this video, we're going to go over some key levels that you need to be looking out for, and then I'm going to give you guys a possible scenario on newer highs. Before we get into that, like, subscribe, comment your thoughts below. Let's get into the video. Now, key levels you want to look out for on NQ is 17,900, 17,920, give or take. After that, you're looking at a move towards 17,875. After 17,875, you're looking at a move towards 17,800. Like I said in the last video, if we start heading towards 17,500, I find it hard to believe that buyers are going to give up these levels down here without some type of news catalyst. Now, we do have news tomorrow, but I think the big news or the most important news is coming in on Wednesday and Thursday, where we're looking at GDP and PCE on Thursday. So those are the things that I care about heading into tomorrow. Well, not tomorrow, but heading into Wednesday and Thursday. But as you guys can see on the Nasdaq, we have a bearish engulfing candle, and we have made a lower high here. So I do believe that we are going to start breaking further down, and I do think that we have the potential to head towards 17,800 here. All right. Looking at the ES. Now, looking at the ES, key levels that we want to see, or key levels I went over last video, is 50.90. We broke and held below 50.90. Now we are looking at a move towards 50.70 and then 50.66. If we break and hold below 50.66, then we're looking at a move towards 50.44. And then your main level, your main key level that you're looking at is 50.29. You want to see how the market reacts there. And the reason why I say that is I do think that that is where we are heading. Okay. So we could see one of these moves overnight, and we are dropping pretty fast after hours right now. Okay. So either bears or bulls, whoever, are trying to let this move happen very fast to get it out the way before we get another high. And we're going to go over that in a bit. So again, your main level that you want to look out for on ES is a reaction around 50.29, which is about down here in this range. SPY. So SPY, this is where it gets tricky. So on the SPY, you're looking at a double bottom. Okay, you're looking at a double bottom on the 4-hour time frame, daily time frame. You probably can find it on lower time frames as well. So as far as the SPY goes, you got your bottom here, you got another bottom here. You broke your neckline at around 503.5. Key levels that you want to look out for, since we broke and held below 507 and closed below 507, you're looking at a move towards 505. And then after that, you're looking at a move towards 503.5, which is your neckline. And then the lowest you can possibly get as far as your neckline goes is 498. Obviously, you can go lower than that, but we're just talking about the neckline here. So we could be looking at a retest when it comes to double bottoms and double tops. We could just simply be looking at a retest before we head higher in the market. And right now, the SPY, it looks like it can go as high as 515. Now, we do have news Wednesday and Thursday, and I think that is going to be the news that could potentially make this move happen. As you guys can see, if you zoom out further, we're in a rising wedge pattern, and this double bottom is in the rising wedge pattern, right? And at the bottom of the wedge, you're looking at a move towards 500, and we can go as low as 498, where I think if this double bottom pattern plays out, that we could be potentially trapping bears once we get down here. Looking at triple Qs, I went over this last video. I said we're either going to see this double top pattern play out on the triple Qs, or we can be looking at a potential inverse head and shoulders pattern form. Now, if you put two and two together, we could be trapping bears if we get back down to 425, 424, where bears see, us break out this wedge, and then they're like, oh, the correction is here, mark is over, we're plummeting, it's over. And then bears get trapped, just like you've seen how I marked it on the SPY. And then we start to head higher towards 450, 470 tops on the triple Qs. So those are two scenarios. So either this double top plays out on the triple Qs and we break below the neckline at around 421. I would say 420 to be safe. You got your top here and your top here. Or you create your inverse head and shoulders. You got your shoulder here, your head here, and another shoulder, potential shoulder here. If we break above 440 on the triple Qs, that will confirm this inverse head and shoulders pattern if it forms. And then we are going higher towards 450, which obviously would be new highs. So those are scenarios that we could be looking at heading into later on this week. Now, in my last video, I did say that I'm expecting a dip to happen, and it looks like that dip is happening now. And I want you guys to understand that when I say dip, I simply mean dip. I'm not saying a crash or a everything is just going to plummet to the abyss. I simply mean that I expect some type of drawback in the market. All right, the market doesn't just go one direction forever, and I do expect a dip to happen. And I think that dip is happening most likely tomorrow, if not later on this week. Who knows? But right now, we see the market dropping. We see everything dropping after hours. We see our key levels not being held. So it looks like that dip is most likely happening into tomorrow. On the SPY, I'm looking at a move towards 498. And then on the triple Qs, I'm looking at a move towards 425, 426, give or take. All right. So that's what I'm looking at as far as downside. And then that's the scenario I pretty much wanted to mention to you guys as far as a potential move towards higher highs, right? Or new highs. IWM. So IWM, you basically want to see a hold above 200. We've been here all the time. We keep coming back here. But honestly, you want to see a move above 203. I would rather a move above 206, okay, or 205.6. That's what I will be looking at. If we break above that, then we're looking at a move towards 210. We're basically in price discovery mode at that point, and we're looking at a move towards 210. Highest I'm looking at is around 215. I mean, not 215, but 212, 215, give or take. So that's what I'm looking at as far as IWM. If we break back below 200, I pretty much think it's just done for. I honestly think buyers are just going to give up at that point. VIX. So VIX, I've said in multiple videos, or at least the past two videos, that I don't think the correction is going to happen or a huge drop is going to happen until we fill this gap at around 13 on the VIX. And I still stand by that. We also have a gap towards 15 on the upside. So tomorrow we could be heading to fill this gap. And then once we fill this gap, we potentially form inverse head and shoulders. Now, again, I don't necessarily like plotting the VIX. It kind of follows its own rules. But as you guys can see, we are forming this bull flag here on the VIX. So we could be, let me mark this out. So we break out tomorrow morning or tomorrow in general. Oh, I'm not holding it, that's why. So we break out of this bull flag heading into tomorrow. We form a potential shoulder here, and then we start heading towards the gap at around 13. Now, if we start heading towards this gap towards 13, that pretty much means that the market is basically going parabolic if this move happens. We head towards 15 and then we start plummeting towards 13. The market is starting to make new highs at that point. At least I think it would be. So that's the move I'm looking at as far as the VIX. Again, I don't think a huge drop is going to happen, or correction, whatever you want to call it, crash, is going to happen until we fill this gap at around 13 on the VIX. Until that happens, I still say be cautious. Okay, be cautious on whatever direction you are deciding to trade. Pretty much, I'm saying collect profit when you can. All right. So we have a gap to the upside and we have a gap to the downside on the VIX. So, and if you don't know, the VIX just moves inverse of the market. I pretty much say this every single video. So if you're just now following, yeah. So when the market goes up, VIX goes down, and vice versa. SQQ. So SQQ, again, we have this double bottom here on the SQQ, and it looks like it's ready to play out. If the market is going to continue down heading into tomorrow, we could be looking to fill this gap. If we break above this neckline at around 12.5, then we're looking at a move higher, and chances are the market is basically tanking at that point. Or we form another inverse head and shoulders pattern, and then we head further down. So, and the market goes up if the SQQ is going down. If you don't know, the SQQ goes inverse of the market as well. All right. So that is what I'm looking at as far as potential newer highs in the market. Hopefully, it all made sense to you guys. So these are the moves that you want to look for in the market. Specifically, you want to pay attention to what's going on with the VIX. At least that's what I will be doing. If we fill this gap to the upside, you want to see how it reacts to this gap. And if it breaks higher than 16.5, I would say 16.2, then you could be looking at a somewhat of a correction in the market, okay, at that point. But again, I don't think that's going to happen until we fill this gap at around 13. So pay attention to the VIX, pay attention to what happens on the triple Qs, pay attention to specifically what happens with the SPY here with this double bottom pattern here. I do think that if we were to make new highs, that bears would get trapped. And we keep seeing it in the market over and over. We see over and over that bears continuously get trapped in this market. So would we be surprised this happens again? I personally wouldn't. But that's all I really have for you guys. Hopefully, you guys got something out this video. Like, subscribe, comment your thoughts below. Discord link is in the description below. You get all my signals, stocks, crypto, Forex, all that fun stuff. And until the next video, have a good one, traders.